your questions answered. So first of all, welcome to Untitled Geek Show. This show puts you face to face with world experts, smart people in their fields that can actually help you improve your life on many subjects. Maybe financials, maybe business, maybe personal, maybe relationships. All those things that I geek out about, and I think you geek out about too. That's the show. Untitled Geek is the show for you. So thank you so much for joining us today. You can find us live right here. Untitled Geek Show /live. Jump in because this show is not your typical show. It's not us just talking at you. It's us talking with you. And if you want to have any question answered face to face in real time, actually talk to our experts, that's the place where you want to go. So head over there now. Let us know what you're doing, where you're hanging out from, where you're joining us, and we're dive right into the topic of the day, which is something that I'm sure is sitting on everybody's mind. Where did all the money go? I'm working. I'm paying my taxes. I have my employees. I have my contractors. I have all this stuff that is happening at the end of the day. And money coming in, and it just doesn't stay. There are a few tricks that you can do if you know them that will actually put more money in your bank account, even if you don't bring in new business. And the guy to do that, to help you with that, is Tim Francis. Hey, Tim.
Hey, how are you?
Thank you for joining us today. So first, this is the first time you and I met. We're in Austin. We are, we're like I think 30 minutes away from each other. We haven't met face to face. So let's get to know each other. Tell me a little bit about what you do. I know you dropped out of business school three times, but you still managed to be very, very good with money. So how did that happen?
Well, first of all, thank you so much. And you're such a wonderful energy, Ifat. It's just, I'd heard about you before, and to experience you live you're just a ton of energy and tons of good vibes. So thank you so much for brightening my day and everyone's day through the show.
Thank you. It's my pleasure.
Thank you. Yeah, so, I knew a long time ago I wanted to be an entrepreneur. And I actually didn't even get into business school. I got rejected from business school 3 times. I'm not a numbers person. I'm not an accountant. Obviously, I never got my MBA. And yet, in the last handful of years, I've been able to help dozens of businesses find hundreds of thousands of dollars of profit in their companies. I currently sit on the board for 19 companies, and I contribute regularly to Forbes. And that's just the thing, is there's this assumption that we need to know all about accounting to be successful financially, or some people just dread it. And the thing is like a lot of the entrepreneur world is focused on just sell more, right? It's all about promotions and marketing and sales and all the rest. And undeniably, that is all very, very important. However, it's a huge problem when you're making more and more, but you're keeping less and less. Some days you just feel like, what's it all for if there's no reward at the end of the day? And business isn't just about money. Obviously, there's people that we impact. There's the opportunity for us to grow. All of that's super important. At the end of the day, the oxygen of a business is cash. And if we run out of cash at any point, all of a sudden we can't help other people. We can't help our teammates. We can't contribute our talents the way that we'd like to the world. And we don't get to grow the way that we wanted to, not just financially, but personally too. So I think that's really kind of at the heart of what I'm an advocate for, is what's the truth of business, rather than just focusing on building a business that you're passionate about, or just building a business that has sold $1 million or something like that. Like, what's the truth of the actual health of a company? And I'll tell you, there's numerous companies I've worked behind the scenes of, and privately, just kind of in the back hallways per se of different businesses. And things can look one way on the outside, but on the inside, it is very unfortunate. It's like the bodybuilder walking down the street that looks like they're in great shape, but inside they've got cancer, right? So I think today is very much about how do we get to the bottom of things. There's an expression that there's something called vanity metrics. So the vanity metrics of business are like sales, how much did I sell, how many customers do I have, how big is my email list, how many Instagram followers do I have, and that's the vanity metrics of business. And there's an old expression that cash is cash is vanity, profit is sanity, sales is vanity, profit is sanity, and cash is reality. And so how do we get to the bottom of what the reality of a business is?
So I love that you bring all that stuff up because I'm in the marketing niche, and vanity numbers are, it's a great way to be like, look, I have 1 million followers. But like you said, at the end of the day is you don't pay the mortgage with, Instagram hearts, right? So that's the problem. The problem is that we get so focused on the vanity numbers, right? And big email lists with no click-throughs, right? Like big followers with no engagement. Big, numbers and like, I'm $1 million business, right? But by the end of the day, you go home with like $10,000 net in your accounting, right? And that's really where people call you, right? And we're like, okay, Tim, what am I doing? So before we jump into like, okay, what's the first thing that you look at when you help a company? Let me just say hi to a few people here. So Cliff is here. So hi, Cliff. He is a father of 5 children. And he's doubling in real estate and e-commerce. So it's awesome to have you. And I think I'm pronouncing this right, Quinn. So sorry, Quinn, I hope this is getting better. The echoing will improve that in the next time. I'm sure you hear your team very well, so that's the important part. And then Michael is here, and he is a business owner. So we're getting some of your people watching us. This is great. So guys, if you have any questions, we will open it up in about 20 minutes, and you can jump right in and speak with us. So, Tim, how do you, when someone comes to you and goes like, look, man, I'm making so much money and I can't even feed my family. What do you do? What's the first thing that you're looking at?
Sure. So whether someone is making, is selling $1 million or $10 million a year, or whether they're selling, $400,000 a year, whether a person feels like they're selling a lot or selling a little, at the end of the day, what really is the truth of a business is what's called the balance sheet. And the thing is oftentimes when we are trying to judge our own success as entrepreneurs, we want to say, did I sell 6 figures? Did I sell 7 figures? Did I sell 8 figures? And what that is talking about sales, which is the very top line, or we like to say that we had $1 million launch, or we have a $500,000 mastermind or something. And that's, that's not insignificant by any means. Ultimately though, the health of the business is on a piece of paper called the balance sheet. And that balance sheet is where you write down, or your accountant writes down with you, what are all the assets that you have, what are all the liabilities, and then what's the difference. It's kind of like saying, what is the net worth that you have in your personal finance? So in your personal finance, you could write down, I have a house, I have a car, I have a boat, whatever the things are that you own, and then whatever the value of that is. And then we have to subtract what are the debts that we owe, like student loans, credit cards, lines of credit, that kind of thing. And if you subtract the two, that's your personal net worth. And so just like with personal finance, sometimes there's doctors and lawyers out there that are making $400,000 or $500,000 a year, and they're almost broke. So that's just like a business owner that is bringing in $500,000, $600,000 or $15 or $20 million a year. Doesn't matter how many zeros there are. At the end of the day, how much are they actually keeping, and how much is actually in the bank? And so that's the first place I need to go. And here's the crazy thing is a lot of entrepreneurs aren't even clear on where they're actually at. And you don't even need an accountant to do just a basic version of your own balance sheet. This is anyone watching this could do literally in the next, probably 20 minutes. They could even do this, is just write down, how much cash do you have in the bank across all your business bank accounts? Secondly is who owes you money, right? So maybe you've provided a service or sold something to someone, they've received the goods, they've got the service, but they just haven't paid you yet, kind of like check is in the mail. Write down what's the money that you've got and what money is owed to you. And then from there, also write down under what's called liabilities, what are all of the debts that you have? Are there services you've gotten that you haven't paid for yet, right? Taxes, that's a super, 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 super common one that people never think to write down, is how much approximate tax amount do I owe this year? And if you don't know, you can just ask your accountant to say, look, I'm not going to hold you to it, but just what's a ballpark number on the amount of sales that I've made? What's a ballpark number, the amount of tax you think I'm going to owe, if I were to submit my taxes today? Things like commission to salespeople, things like if you're selling with affiliates and you've just done a launch, and let's say that you had a $300,000 launch and now you got to pay $100,000 in affiliate fees, but you haven't cut the check yet because the refund period hasn't ended or something like that. So where is it that you're owing money? And only once we get clarity on what we've got and what we owe to others do we really find out, at least in a broad sense, where is this business today? Because you know what, like I've operated in businesses before. They brought me in, and a business doing 7 figures in sales, and they thought they had close to $250,000 worth of cash to work with, and they were going to hire another teammate. The owner was going to join a high-end mastermind. They were going to cut a nice dividend check to the owner, so the owner could then pay off some personal debts. Like there was all these things they were going to do, and when we just sat down and got clarity on what's the actual health of the business today, we discovered that they had like $60,000 in the bank, not $250,000. And it literally was just because they hadn't taken into account some of the things that I talked about today and other assets and liabilities kind of in that ballpark. And so, at the end of the day, it's like how different is your decision making if you've got $60,000 to work with versus $260,000 to work with? Does that make sense?
Totally. And guys, just before we continue, I just want to make sure that we're going to get all your reactions and all the stuff right here in the layout. So let me update the information right here so we can do that. And as I do this, tell me, let us know. Do you know what your business situation is right now? And we see comments from Elizabeth that says like, holy wow, thinking $250,000 and only having $60,000. That is a major thing, right? Because that's like, do I, like you just said, Tim, right? Do I buy a house? Do I add another team member? What do I do? And if I don't have that much money, what do I do? And I think maybe, I just heard, I'm going to share this because it kind of relates. There was a big internet marketer that had a huge launch, $4.5 million in those three months, right? Everybody will look at this and be like, I want that, this is amazing. But at the end of the day, after paying affiliates, and after paying for the marketing, and after paying for the event, and after paying all that stuff, do you know, Tim, how much can you guess? How much do you have left?
I'm glad I'm sitting down. I don't know what the number is, but I'm glad I'm sitting down.
It is. He had $400,000 left, and that's before taxes. So 3 months of work, tons of like everybody who knows a launch knows how difficult a launch is. 3 months of work, all that stuff. He could have just gotten in and gotten a corporate client and be done with it. And this is where you come in, right? You're looking at the numbers and like, okay, as a business owner, what's the best strategy rather than just the tax money, right? Like what's the best strategy to grow the business? And when you do that, you end up finding thousands of dollars in people's accounts. So tell me about that process.
Yeah, the thing is there's so much internet advice out there, and there's so much hype around the next domination method or whatever strategy.
Yep.
And make no mistake, marketing and sales is super important. We need customers coming in, and we need everything that leads to a customer, right? So we do need an email list if that's part of your strategy, or a Facebook following, or whatever it is. Just far too often we confuse what actually makes a difference versus what everyone is hyping up to make a difference. So, I can learn how to launch a product using your example, and I could learn, I could be told that, one funnel will change my entire life, or one launch will change everything, or whatever. And I can get it, and there can be tons of testimonials, and there can be lots of energy and lots of excitement around that. And you know what? For the person sitting next to me in the seminar, this might actually be the perfect strategy for them.
Right.
And yet for me, one seat over, it might be a horrible idea. And the thing is, I think oftentimes we get sold that there's one solution, that there's one marketing strategy that is the method, or there's one one platform, right? Be it Facebook or YouTube or something that is like the platform to use. This is the ticket, EFAT. This is the ticket, right?
Yep.
And the problem is that every single one of us has a different set of circumstances, a different set of resources, and a different timing. And so for me, what's a great idea today is different than what was a great idea for me 12 months ago, and is different than what's a great idea for me in 12 months. Timing really matters. Furthermore, if I have, to use the previous client's example, $250,000 in the bank and a team, and I've got an email list and if that's the resources that I've got, then my decision, what's right for me, is different than if I'm that same person with only $60,000, right?
Yep.
And then from there, my circumstances might be different. If, for example, like I've had clients that have said, you know what, Tim, this is a great idea, but you know what, I'm going through a divorce and I can't build my business too much, because when my business gets split in half because I have to give half of it to my ex, I don't want the balance sheet to be that strong. And go, it's a good point, right? So like personal factors, business factors, right? And so it's whatever is internal to us, what is external to us, then whatever our timing is. And so what allows us to get clarity on where we're at in our resources and where we need to go with our circumstances and our timing is knowing our numbers. And it begins with like our financial numbers. Looking at the balance sheet gets us clear as to where we are today. There's a lot in entrepreneur literature and culture that talks about goals, right? It's really, really, really important to have goals. And some people go so far as to say you should meditate on them, and The Secret or whatever, build a vision board. And if someone wants to do that, that's fine and that's great. And it's only part of the puzzle though. Part of the puzzle is clarity of where we're going. A huge factor, which very rarely gets talked about, is where are we today? Because if I want to drive to Austin to come see EFAT and Tim, if someone's starting in Los Angeles, it's vastly different than if they're in New York, right?
Yeah.
And then there's also too little emphasis put on the path to get there, right? And only once we've got clarity of all three of those. And I can really thank my mentor, Keith Cunningham, for really emphasizing that with me on my own journey. It's like all of a sudden things become so much clearer. And it's about knowing numbers on all three of those levels for us to go, okay, now I can ignore 99.9% of the hype that's out there and focus on just doing this for the next 90 days. It's the right fit for me, for my circumstances, resources, and timing. And I don't have to get caught up in all the hype and like that constant fear of like, am I doing enough in my business?
And you know what? As a business owner, I can tell you that I really have that all the time. And you're right. Like not knowing where I'm at is can really keep you up at night, right? Because if you have employees, you don't know if you can pay salaries the next day. And I've heard of people who are like swimming in millions of dollars, everything is working fine. Something happens in the market, and they get the call like, fudge, we can't pay our employees, next month because the market is down, something happens. And so really having that overview strategy and knowing where you're at is super important. And people who are starting out, and myself included, we don't know where to start out. So balance sheet, if you've never seen a balance sheet, should I just go to Google a balance sheet and then start filling out like a spreadsheet, or what's the first step from that?
Yeah, so I think that there's I think I'm such a practical guy. Like
That's awesome.
Yeah. Like as you can see, I used to be like a touring drummer. I'm not like an MBA. And so I think like kind of the street level version of finance is really the most useful. And so for me, like literally opening up a spreadsheet and just listing like here are my assets, right? And so I have this much cash, I have this, people owe me this much money, I've got this much inventory, right? If your business owns a vehicle or some property or something like that, what is the value of all that? And then if we subtract literally, and you can do this just in a spreadsheet, like open up Google Sheets, it's free, right?
Yep.
Is to then list what do you owe? Like I said, credit cards for the business, and you can do this exact same exercise in your personal finance as well if you want to know where you're at personally, right? And then the difference of that is personally would be called net worth, in a business is called equity. And if we get even just a first scratch version of that written down, and make sure to include like an amount for taxes that you may owe at the end of the year, then from there, go to your accountant and say, what else do I need to add to this in terms of assets, liabilities? And your account will probably say some things and have some words in there that are kind of confusing, like retained earnings, like what the heck is that?
Yep.
And, share capital and all the rest. But you know what, if you can at least just get a first cut of this written down, we can it's like, like if I've never had this myself, but I've heard of people who suffer from vertigo, like the room spinning. Mm-hmm. If all they do is they put their foot on the floor, all of a sudden that stops the room from spinning. And that's like oftentimes the very first step. Like too often as entrepreneurs, my former self included, we'll just open up our bank account because we don't understand our accounting. We don't understand QuickBooks or Xero or whatever it is that our accountant has got us set up on. And so we just go like, well, I don't know. If there's money in the bank, I can spend it. If there isn't money in the bank, I can't spend it. And it's just a very, very incomplete view. It's kind of like saying, well, I have a car, I should drive somewhere, right? Okay, that doesn't make it, that's kind of dangerous, right? Because on one hand, if I've got no money in the bank, but I'm getting a check next week, I'm going to make very different decisions than if I've got no money in the bank and I've got no check coming, right? Or likewise, if I've got a ton of money in the bank, but I have to cut a huge check to the IRS, to affiliates, to Facebook for ads, and to wages, and for the big mastermind I just joined, all of a sudden that, $500,000 or $1 million in the bank doesn't, is not what I thought it was. So that's really the first key, is just like, how do we put our foot on the ground to stop the room from spinning, to just say, okay, here is where I am right now.
I love it. And so I know I'm making bad guys. I apologize for that. So I'm just going to ask very short questions, and Tim is going to do most of the conversation. And we're about to open the show to get you guys in and ask Tim any questions that you might have, and then no echo at all. So we're going to make that work for the next hangout. So the first thing, we talked about like two different types of accounting. Right? And the first question that I was asking you, what does Trump accountant know that I don't know? And then you said there's two types. There's tax accounting and entrepreneurial accounting. So let's talk about the difference between the two for a second.
Sure. And so this is a big reason that so I'm not here to replace anyone's accountant or tell anyone that their accountant isn't necessary. Not at all. Our accountants are crucial, in fact. All of us as entrepreneurs, our accountants are crucial because they've done the work to learn the tax code, and they've done the work to understand what is it that you can and can't do, because it's tough to run a business if you're in prison, and no one wants to go to prison, right? And your accountant is also here to do something else, and that is to help you to minimize, while staying within the rules, the amount of taxes that you pay in income tax and or sales tax every single year. Perfect. Now your accountant can do some other things, but at the very basic level, that's what the vast majority of accountants are helping you to do, is to look at that, and then to look at like tax strategy or planning, like how should I take this money out of my business and into my own personal bank account. And that is very much tax strategy, and that is very much tax accounting, and that is like what 90 to 95% of the accountants that serve small business owners do. And that's all that small business owners ever ask for. And that is one category of accounting. The category of accounting I'm talking about is very different. I call it entrepreneurial accounting. Technically, the world of finance calls it managerial accounting. We call it entrepreneurial accounting. It's just way simpler. Mm-hmm. And here's a perfect example. If your accountant is taking your numbers, they would take something like they would take all of your air travel, they would take all of your Uber rides, and they would take all of your accommodations, and they would probably lump that together and they would call that travel. And they would tell the government that you spent this much on travel, and that you could write certain things on and you could not write other things off. And that would be tax accounting. Now, the thing is from a managerial perspective or an entrepreneur accounting perspective, we may look at that very differently, right? Because as an entrepreneur, I want to get a return on investment for the things that I'm putting money into.
Right.
And so there could be two flights that I took. They were both flights to Austin, for example. I may have stayed at the exact same hotel both times, and I may have taken the exact same Ubers the exact same number of times on both of these different trips to Austin, right? And my account would have put those all together under travel. As an entrepreneur, though, perhaps one of those trips to Austin, including flights, accommodations, and ground transportation, perhaps all of that was for me to go speak at an event, which is me marketing myself, which is hopefully generating some sales. And the other trip to Austin was for me to take a course to learn about something to do with marketing or sales or knowing my numbers or something like that. So the purpose of the trip is very different. And for me, being able to see the difference, I'm now able to say, okay, did I get a return on investment on that trip that I took to speak that was a marketing trip? And if I'm able to see the difference between the marketing trip versus the learning trip, now I can say, well, how many clients came out of that? And if it was a lot of clients, I should go do it again. If it was fewer clients, if it was less money that I made from the money I spent, then I probably shouldn't bother going to that next year because it just wasn't that fruitful for me.
Right.
Likewise, I can look at that education trip and I can go, oh yeah, I took that course on Facebook ads, and lo and behold, it cost me $4,000 total to go, and I ended up generating, $200,000 of sales. It's probably worth it after all expenses, including ad spend and whatever. The problem, though, is in tax accounting, all that travel would just be lumped into one big number, and I have no way of telling what was education and what was sales and marketing. Whereas if I look at it from an entrepreneur perspective, we're actually able to break that apart and say, was that trip actually worth it? And now as a CEO, I can start looking at not only education, not only marketing efforts, but I can also look at the teammates that I hire, possibly the equipment or other assets that I buy. And I can really start to see, you know what, this, and this were all worth it because we made a big profit off that. And this other weren't worth it because we made some money, but we didn't keep any of it. And only once we take that kind of managerial or entrepreneurial look do we now start to be able to run this thing by the numbers. Does that make sense?
Totally. I love it. I'm kind of like, trying to be, because I'm echoing for some reason. So I'm going to bring our little guest in. Elizabeth, how are you? Jump on in. Let's see.
I am fine, darling. How are you?
I'm doing fantastic. Good to see you.
Hey, hello.
So Elizabeth is actually in Houston, very close to us. We're getting texts in here. So Elizabeth, any questions for Tim?
So Tim, one of the things that was really annoying when I was trying to make my business plan was the numbers. Now, when you're talking about the managerial accounting, what I really like about that is I like the whole, okay, that makes sense. This was the true value of my trip to learn Facebook ads versus the value of my trip to go trolling for clients. So is there some way that I can apply that stuff to doing math for my business plans?
Sure. Yeah, I'm happy to answer that. Could you say a little bit more about that? Because I want to make sure I zero in exactly on what matters most to you.
So the biggest problems that I have that I had with doing my business plans was estimating cost versus loss.
Okay, can you say more about that?
Okay, so I ended up grossly overestimating or underestimating my losses versus cost, because a lot of this was stuff I was not too entirely sure about. I mean, I don't know. I don't want to say I'm spitballing to frighten my accountant on TV, but you know what I mean. Um, so is there a way that I can use this, or that somebody who's making a business plan in the future could use this to more accurately represent those costs and losses?
Yeah, 100%. And first of all, most entrepreneurs don't even have a business plan. And so whether a person has a business plan or doesn't have a business plan, I think that there's two things coming to mind for me right now. The first is that ultimately it's cash that is the oxygen of a business. And whether we wildly underestimate or overestimate something, at the end of the day, do not run out of cash. And so along those lines, there's a tool that I have pretty much never heard a small business accountant encourage. And yet I think it is probably one of the two most crucial tools for almost any business, and that's a cash flow forecast. So I think the first is a balance sheet, and the second is a cash flow forecast. So all that is again, I'm going to open up good old Google Sheets. It's totally free. And I'm just going to put week after week after week, 13 weeks, which is 1 quarter, right? 3 months is 13 weeks. And I'm going to put what kind of cash outflows do I see going out of the business? Maybe I have to pay payroll. Maybe I need to pay off a debt. Maybe I need to buy a piece of equipment or pay for mastermind or pay for a course or a trip or something that's coming up. And even if it's round numbers, that's fine. It doesn't have to be down to the penny. It doesn't even need to be down to the dollar, right? Just round numbers. And if I slot those in over the next 13 weeks as to where I see those dollars going out, and if I also slot in the dollars that I see coming in, right? Maybe I've got a project that I'm securing, a contract. If I've got a regular monthly revenue coming in from a specific client, or maybe if I've got a continuity program or something like that, I can slot that in. And so the top half is cash coming in. And I would include, first of all, the predictable stuff. And then after that, I would put the one-time stuff. Then after that, in the bottom half, we've got our cash outflows. And that's where do I have cash predictably going out? So if I'm paying teammates a certain amount every single month. And then if I've got one-time outflows, like cash going to a seminar or something like that. And then at the bottom, I've got the net. So every single week, if I take cash coming in minus cash going out, I can see each week how I'm doing. So if I don't know, or am I able to share my screen? Because I might actually be able to just show an example of this.
Yes, please do.
Possible.
Yes.
Okay. All right. And Elizabeth, might take me just a moment to dig this up in Drive. It's occurring to me now I should have had this open ahead of time. So I think that, so I'll speak to the second part and then we'll circle back here, Elizabeth, so I can show you an example. When we are in the beginning of something, whether that is a product, whether that is a campaign, whether that is an entire business, there is a ton of uncertainty. And that just comes with the territory. And that's why starting new things is oftentimes the slowest, least profitable, and most frustrating, is because we just don't know what we're dealing with, even if we've done something similar in the past. And so that's why checking in regularly as to where we're at to check our assumptions is super important, like even sometimes once a week. Or if it's in the middle of a big launch or we're spending a lot of money, maybe even every single day to check our assumptions. Because if we're way off, we need to catch that ASAP before we go and spend unexpectedly $50,000 on ads that aren't actually producing any results for us. And that is true of financial numbers as well as marketing numbers. If I'm driving a ton of traffic, spending a lot of money with Facebook ads, for example, towards an ad and it's just not converting, that's not a financial number, that's a marketing number. But it can certainly have a big financial impact very quickly if I don't catch that in time.
So while you're looking for that, let me just say, hey Elena, she's here, she's watching us, and hey Nima, Your favorite Israeli is doing just fine. And Estelle here is watching us, and Moni Schmidt is watching us, and Cliff has a question, right? Of course, after we answer Elizabeth. So guys, if you want to jump in and talk just like Elizabeth did, it's very, very simple. See that link over there? untitled.geek.com/live. Just go to that page. If you're already on the page, refresh the page, and the button below this video will become active. All you have to do is click on it, and if that's your first time, give your camera, allow your mic so we can hear you and see you. And that's it. You'll be here talking to Tim just like Elizabeth did. So this is what we are going to do, and then we'll see if Tim is ready, and if so, we're going to switch to some spreadsheets. I want to know so far, guys, there's great questions that are coming in about real estate and finances. This is your time to get the help that you need, because let me tell you, it's $1,000 to speak to this guy in person, face to face. So take advantage of this right now, and let's get you some help that can help you on your way to continue. So make it again. Okay, fantastic. Let's switch to you, Tim.
I'm ready. And don't sell me short here. It's $1,000 an hour, Ifat. So
that's what I said. Didn't I say 1,000?
You said 1,000 to meet with me, but it's $1,000 an hour.
Oh,
so
yeah.
You don't give me for a whole day for $1,000. Okay. All right. Let's see here. Hopefully this shows.
Hold on. Let me mute you. There we go. Okay.
Okay.
It's all you.
So can you see a spreadsheet there, Ifat?
Yes, we can.
Okay, great. Okay, so if you're to build this out, you can see that I've just got the dates across the top. I've got 13 weeks. Super simple. There's no rocket science here. Then from there, and so all these tabs are here because when I teach this, I'm just showing you how we build it out. But normally it would just be all in one tab. So then after that, I would add my average monthly expenses. So this is fictional data, but just it's data so we can work with it. So I have cash going out on average of, let's say, $10,000 a month. Now, the way that you come up with this number is you can simply just go to your credit card statement, or you can go to your bank account. And I get it that every single month has its own fluctuations up and down, and some months are heavier and some are lighter. But if all you do is just look at like, how much did I pay down my credit card each month, and you average that over the last
I'm sorry, Tim, hold on just a second. Neville, don't unmute yourself. While someone else is talking, you need to be muted. Okay, go ahead.
All right, perfect. So again, this doesn't need to be like some forensic accounting adventure where you have to get it all specific. Like literally just what is the average amount that I'm spending on a monthly basis? And you can literally just look at your credit card, and then if you have any other like major checking accounts you're cutting big checks from, like literally, I'm telling you, in under 20 minutes, you can have an average monthly amount that's going out the door on a monthly basis. So then just slot that into your forecast here. Then after that, we're going to add what kind of like new and one-time or occasional expenses are coming up. So maybe I'm paying commission to someone who helped promote me. Maybe I'm going to a workshop that's $10,000, flights, accommodations, and tuition. Maybe I'm buying some new tool, be it software or hardware or a physical something, whatever, maybe I have to buy inventory, whatever it is, whatever the cash outflows are that are kind of more occasional, then I'm going to add those in as to when I think they're coming down the pipe. Then after that, I'm going to add what are the repeating inflows, so cash coming into my world. And maybe I see that on average, if you're someone like Elena, who has a great online course, we just know that every couple weeks, my credit card company settles with me, and when I average that out, it's $3,000 every couple weeks. In Elena's case, it'd be much higher than that, but just as an example. Or maybe you've got a client who's paying you every 2 weeks, or maybe you've got whatever the case may be. So then after that, then we're going to add in what kind of cash that's coming in that's occasional. So maybe I'm receiving a commission, or maybe I'm teaching a workshop and I'm being paid $500 to show up for it, or something like that. So go ahead and add those cash in. Then after that, we're going to subtotal this. So in this week, I've got cash coming in of this amount, and I've got cash going out of this amount. And this week, I've got this amount of cash coming in, and I got this amount of cash going out. And all it is, it's like a stone simple calculation. It's literally just summing what's going on here, and then here we're just summing on what's going there. Then from there, we need to take so what's the net for the week? So we can see that all that was added here is, we said sum 9,500 in minus 10,000 out. So this is a negative $500 week. Then from there, we're going to add a bank balance. So if I'm starting right now, today's not August the 1st, but whatever you would adjust it so it is on point. Let's say I got $5,000 in the bank. Then from there, that goes there. And then I'm going to now add a start and end cash. So I've got $5,000 at the start of everything right here. So that $5,000 is there. So that's the exact same number. In fact, that number feeds that number. And because I already know that the net cash for this week is negative 500, that comes from plus 9,500 minus 10,000, negative 500. At the end of this week, I know I'm going to be somewhere around $4,500 in the bank because I started with 5, which is that number there. I ended up with a net of negative 500 for the week, so I'm going to end up with approximately 4,500. So then from there, I'm going to now build that out across all the weeks. So I'm simply dragging this formula and pulling it across. And I can see that on balance, I'm going to have 5,000 when I start. Then I'm going to be minus 500 for the week, which is the 95 minus the 10. And I'm going to be left with 4,500 at the end of the week. At least that's what it looks like is likely going to happen. This isn't, hardcore or anything, but that's what it's looking like. Now, guess what? My end cash here becomes my start cash for the next week. Ending at 4,500, therefore the start of the next week is 4,500. We know that this week is $0 coming in, 5,000 going out for negative $5,000 for that week. I had 4,500 at the start of the week. All the stuff happened, and now I'm at negative 500. So I'm literally upside down. I'm out of money, right?
Yep.
And yet again, the end cash becomes the beginning cash. Here's what happened for the week. Here's where I end up. End cash becomes start cash. Here's what happened for the week. Here's where I end up. If I want to be extra geeky, because just like you, Ifat, I'm that geek. I've actually put conditional formatting on. And so anytime there's a positive number here, it's green. And anytime there's a negative number, it's red. So what that means is I can now see what is coming down the pipe. And you know what? It doesn't matter that I've got this big check coming for 10 grand here, and I'm ultimately going to be $500 in the green because I've run out of cash twice already. So what that tells me is I gotta rejig this situation. So I might say, for example, to this person that's giving me commission here, $10,000, I might say, could we renegotiate this that I could get paid weekly instead of one lump sum? And so this might become 3,333, 3,333, 3,333, and I'm going to remove that. And guess what? Just by renegotiating one payout with one person who's supposed to pay me, I've now pushed the uh-oh line, also known as the OS line, down the line. And guess what? I went from having 14 days of breathing room because I was going to be upside down here to now having 1, 2, 3, 4, 5, 6 weeks of breathing room. And now I can breathe again, at least a little bit, right? I know I'm going to make payroll. I'm going to be able to pay everyone and all the rest. I've got a new problem, right? I got a new problem that I'm going to hit the uh-oh line on September the 5th. I'm going to be upside down by 3,000. What do I got to do? Well, maybe what I need to do then is, instead of teaching this workshop here, I need to teach this workshop here. And instead of it just being something casual, because it's not that big of a deal, I'm going to double down on it, and I'm going to put a ton of energy into promoting it. And instead of it being 500, I think I'm going to be able to do the workshop sooner. It'll be $2,000, and now I'm in better shape, right? Now I might also see, oh my goodness, okay, so I've got this $10,000 a month of expenses. What would happen if I then went into my expenses? I find out, there's some software I'm not using. I find out that, I really don't need that one thing. Like, it's just been, it was a nice to have. It was a good idea at the time, but I just don't need it anymore. And I can actually cut my expenses by $2,000 a month. and I'm now down to eight grand in expenses. And guess what? I just saved the day. Now I get to push the line even further down the path. And then as I keep looking at this, I can go, well, you know what? I'm $3,500 upside down here. I hate trading time for money. You know what I mean? Like that's for like rookie entrepreneurs. I don't like to trade time for money. That's such a drag. But you know what? It doesn't have to be forever. I'm in trouble right here in, 8 weeks from now or so. I'm going to be upside down by $3,500. So you know what I'm going to do is I'm going to announce right now that I'm going to do a mini mastermind where 4 people will get to fly to my city, and I'm going to sit with them with their laptops, and I'm going to build out their thing with them. Or if you've got a physical product, I'm going to do a flash sale. Yes, I'm going to sacrifice some margin, but I just need to have some cash. And so, maybe you don't always want to do flash deals. Maybe you don't always want to do masterminds. Maybe you don't want to do done for you work. But you know what? Because you're a CEO of your business now, you're not just a lifestylepreneur. You're going to take this seriously, and you're going to say, all right, I'm going to do this intensive for 5 people. They're each going to pay me $2,000. I'm going to generate $10,000 for myself right there. And guess what? Now I'm clear for the entire period. So you can see now I'm literally engineering piece by piece what this needs to look like. And I can see where the expletive moments are well in advance. And so now I can do something about it. And now I know, like, if a critical part of me being safe and secure and like that I can sleep at night is that I get paid these 3 commissions on time, then that tells me I better put it in my calendar. I'm going to contact that entrepreneur who's supposed to pay me, and I'm going to remind them, hey, friendly reminder, just want to make sure we're still on track for this payment to go through on Monday of next week. Thanks so much. I'm sure it's going to go through fine. Love, Tim or Ifat or Tim and Ifat or whatever, right? And from there, I know, like, what do I need to do when I wake up on the morning of August the 6th? I need to remind this person to pay me on August the 8th, right? And now I can line up my marketing calendar around this as well, because I know I need to announce this intensive. And I know that I also need to alter my marketing calendar because we need this workshop to happen. And I also know that I need to take a quick look, like what are some quick things I could reduce my expenses? And so now my to-do list as a CEO is becoming way clearer, instead of me just getting all hopped up on the latest idea of, I need a Facebook Live 5 times a week so that I can build my business, or I need to, podcast 10 times in the next, or I got to start a new podcast or something like that. Let's connect ideas to reality, and then let reality inform ideas. And between the two, we're able to come up with like a clear CEO plan. And so circling all the way back to Elizabeth's question around monitoring losses and business plans and all the rest, hopefully, Elizabeth, you can see by taking this approach, we now have like sanity on where we're going to be at on the reality of this business. And you know what? If it turns out that some of my assumptions, because it's a new project or new launch, let's say that this is a flop. Okay, well, let's find out that it's a flop. If this leads to not 500, but instead it's only $100, okay, well then let's know about that. And now we just got to rejig the situation and so it's not about having like a one-time like silver bullet that solves everything. It's about what is the week-to-week reality. And I'm not suggesting that an entrepreneur has to do this every single week. I would say if you're in an extremely tight cash position, do it almost every single week, if not every single week. That's what I had to do. I was on almost a daily basis when I was $120,000 in debt and had almost no way of making money because I was sick and I couldn't walk, which happened to me in 2011. I couldn't walk for 3 months. And literally every week I had to be looking at my bank balance. I had to be looking at like, where was I at? Where's the shit line in terms of, when am I going to run out of money? And sometimes if it looks like we're just going to run out of money, we need to know like, okay, well, I got to go raise some money from an investor. I got to get a loan from a bank, or I got to go get a credit card or something like that. And what makes all of that possible is like time. If I can see ahead of time something's coming, I can go and get a loan, or I can ask to borrow money from someone, or I can go get that credit card or whatever. When it's the 31st of the month and I have to pay everyone on the 31st of the month and only then do I run out of money, that is a huge problem, because not only do I not have the money, it's a huge panic. It affects my friends, my family, my loved ones. My own stress level goes through the roof. And now I got to ask for favors, and now I look unprofessional to all the people that I owe money to, right? So it's about getting that sight to be able that clarity about what's coming down the path, so that I've got the breathing room to be able to shift and shake as needed, depending on what's coming down the pipe of me. Does that make sense?
I love it. I love it. So first of all, I know a lot of people who are watching this right now probably go like, how do I get that spreadsheet? And before we answer that one, Elena already kind of spilled the beans and said that she's looking forward to the workshop next week. So let's talk about the workshop for a second, and then let's see what people will live with.
Okay.
Let's do that. And then we're going to take Cliff's question.
Great. Yeah. So there's been I've taken my method and what I've learned from other masters and books and all the rest into dozens of clients now, and we've been able to find significant profit, sometimes without even increasing sales. We've been able to identify huge gaps of misunderstanding. Like, for example, the client that thought they had the 250 and they only had like 60 to deal with. We've helped discover like sometimes one business partner is taking money out of a business but they weren't telling the other business partner about it. And like, I've caught all of that.
Wow.
When I've been, and I mean like tens of thousands of dollars, right?
Probably. How do you catch like someone stealing?
Well, sometimes it's stealing, sometimes it's not stealing, right? And I
Thank you for clarifying. Yes.
Yeah, because sometimes someone just, they say, oh, I need some money short term. They take it out of the business. They get busy. They don't put it back, and they have an agreement with their business partner that that's okay, right? So,
yeah.
I just want to be careful to not point fingers that way.
Duly noted. Thank you.
Yeah. And money's a sensitive thing, and if some of my clients ever saw this, I'd want to make sure that they didn't feel like I was pointing the finger at them. You know what I mean? So, so it's when you know your numbers. When you know your numbers, and I don't mean the accounting version, which is the 99.9%, which can be very overwhelming, boring, blah 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 blah, right? At least that's what it feels like to entrepreneurs, is blah blah blah. That's why we hire accountants. That's why we hire bookkeepers. They are the professionals to know the tax code, and they are super, super important on our team. And then there's like what happens in our business, which is over here. And oftentimes what's missing is the link between us as entrepreneurs doing everything that it is that we do over here, and us being able to provide leadership to our accountant, right? So I don't need to know 100% of graphic design to be able to lead a graphic designer. What I can say to that graphic designer is, I like that logo or I don't like that logo. I don't need to know 100% of web design to be able to say to a web designer, you know what? I think this page would be better if I could link some things here, put a button there. Like, in all these examples, all I need to know is the first 0.01% of web design, the 0.01% of email marketing, 0.01% of Infusionsoft, whatever the tool is. That's all I need to know. And now I can actually have a conversation with the person who knows the other 99.99% of whatever that field is. And so the course I'm teaching, called Know Your Numbers, is my commitment to helping entrepreneurs to graduate into being CEOs, so that they can actually have the clarity of where they're at, where they need to go, and also the leadership of their accountant, so their accountant can help them to build the business the way that the entrepreneur wants, and also so that entrepreneur can gain confidence, competence, clarity, and control. So now that filters down through the whole business. When we've got a CEO that's clear that we're healthy financially, we know that we've got something we got to deal with coming up in 5 weeks, and we know that we've got this other thing coming down the road 10 weeks from now, the amount that entrepreneur just gets to like calm, like just like be at peace and free to do the things they love, like create and promote and speak and be with customers and be the face of the business, whatever it is that is your jam, then let's get you to that place. And if we've got this existential threat of, I don't know if I'm going to run out of money, or I don't know what's coming down the pipe, or whatever, it really prevents us from just being at peace to do the parts of the business that we love. So Know Your Numbers is a 2-day course that's happening here in Austin. I've never presented this publicly before. And I also have, so this is the first time ever. And I was, in the past, when I thought about creating this course, I was pretty sure I would charge between $2,000 and $5,000 for it because it's just so essential and powerful. Then 3 months ago, I joined a personal development course through the Landmark organization, and they encouraged us to create a volunteer project where we could pick a community that we really like, and from there do something meaningful for that community. I'm a diehard entrepreneur. I just like dripping entrepreneur, and I said, you know, what is a difference I could make for entrepreneurs here in North America? And it dawned on me that this course that I'd been wanting to put out for quite a while would be exactly the right fit. And so I'm actually doing this course for free, plus a donation to Kiva. Now, the minimum donation to Kiva is $25, so it's very inexpensive. It's basically free. And what Kiva is Kiva creates loans to third world entrepreneurs. And I'm telling you guys, like, you know, sometimes we feel like we have challenges or whatever. I mean, there are people in third world countries that $25 would allow them to buy like 5 more chickens, and those chickens then produce more food. The community that they're in then has more nourishing food for babies and children and adults. And that entrepreneur, it's not a handout, it's a hand up. It's not a gift, it's a loan, right? And so they end up paying that loan back, $25. And then from there, guess what? You and I, as the Kiva lenders, we're able to re-lend that money out a second time, a third time, a fourth time. So we can actually recycle the money over and over and over again. I think that, you know, instead of giving our money well, I won't say too many names, but big mega charities that only 5 or 10% makes it to the front lines, I am way more interested in having 100% of money go to the front lines, which is what happens with Kiva. And secondly is I love the idea of actually building an asset for, you know, and for each of these third world entrepreneurs to build their assets. So now they're better off. We're teaching them to fish, not giving them fish. And just the collective ability and prosperity of the world gets to climb. So yes, you get to work on your own financials and improve your own financial situation by coming to know your numbers. You also get to help entrepreneurs around the world, which just absolutely makes my heart glow. So the course is September 8th and 9th. EFAT on the screen there has the button for Know Your Numbers in the top right corner.
So let me show you what happens. So right here on thatgeek.com/live, you will see right here next to our video, these little buttons for the event with the dates and everything. Once you click on that, this page opens up, and this will tell you everything you need to know about the event. And when you scroll down, it shows you how to register. You can join Tim's Kiva team, or you can go directly to Kiva and just let Tim know. And when you open that, this is what happens. You're going to see this page. You're going to learn about Kiva if you don't know anything yet about them, which I didn't. And Tim, this was a little confusing to me because I didn't realize that clicking on this actually is joining your team. So if someone comes to this page, all they have to do is click lend now to a person, or what do they need to do in order to qualify for your event?
Yeah, so you can click that lend now. If you want to donate to a different entrepreneur overseas, you can donate to anyone. All that we want to see is just a screenshot that you've donated to some overseas entrepreneur. So if you click lend now, then from there you would put in your credit card information or however it is that you're paying. And then from there, once you have your success page indicating that you've successfully lended to Kiva, then you would just email that into us, and now you've got your spot in the course. And the other step is we do need your information there. So first name, last name, email, cell. You would click, I joined your team and donated, or I made a Kiva donation, email the receipt. Then from there, click the box, understand my registration is not complete with a Kiva donation. You'd hit submit, and you would be into the course. Just that simple.
So again, if you guys want to do that, it's right here next to our video. You see this beautiful Know Your Number little icon. Click on that. That will take you to the page, Teams page, and you can decide however you want to register. You'll have the event and the details here. It's going to be in St. Edward's University on Congress Avenue in Austin, Texas. And you'll get to meet us face-to-face, which will be fantastic. And then Tim and I will meet face-to-face, which will be fantastic.
And we do have people coming from multiple cities. We've got multiple people flying in from out of state. Cliff, I believe I know who the Cliff is. Yeah, it's Cliff Hayden. Awesome. I love Cliff Hayden. So he's coming in from out of state. Got someone coming from Portland. We've got a few people thinking about coming in from Canada. So, this isn't just for Austin entrepreneurs, nor is it just for Texas entrepreneurs. This is available, excuse me, to anybody who thinks this is really important.
Yes, and so let me switch here for a second. There we go. I think when it's on me, I get echo. So I'm going to leave it here on you for a second. I'm going to unshare this and let's see if that works. No, it doesn't. Okay, so I'll leave it on you and I'm going to ask the question just to make sure that I'm not echoing and everybody can hear us. So Cliff was asking, I have financial statement in place. I'm in real estate and I depend on cash flow. I have a good idea of my management accounting, if not perfect, but pretty close. My tax or cash-based accounting needs work. My big headache now is figuring out how much I owe at the end of the year. And as of now, I have no idea, and I just write a check after the CPA goes through our books. I need help planning our taxes, putting money aside throughout the year, and be ready with Uncle Sam when Uncle Sam comes to visit. So I'm sure a lot of people are in that same space. So what does he do? What can Cliff do?
So first of all, Cliff, so excited to see you 2 Saturdays from now here in Austin. So excited to spend the weekend with you. And everybody who's signed up for the program. I know Elena Wilkins is going to be there as well. I'm super excited to see her again. I'm not recalling everyone else who's there. I know Dr. Maggie Yu is coming. I know, yeah. So we're going to have a great time, you guys. So Cliff, what I'm hearing is actually a couple things. So number one, you want to be able to better plan what your tax liability will be, like what your the check is that you'll have to cut at the end of the year. And the second thing, what's the second thing I heard? There's
so how much at the end of the year, and my big headache now figuring out how much I owe at the end of the year, and he doesn't have my tax or cash-based accounting need work.
Right. Okay. So there's a wider conversation here, and we're going to tackle this during Know Your Numbers, and that's about cash versus accrual accounting. That's the technical blah, blah, blah of what I'm saying. And we'll get more into that. And without getting too much into that, I think two things. One is, Cliff, you would be able to have a far clearer idea of how much money you need to have set aside for taxes if you switch to like quarterly reporting with your accountant. So at the end of Q1, your accountant is taking a look at things and saying, okay, Cliff, here's where we're at. And then at the end of Q2, same thing, Q3. So now you've got a sense throughout the year of what's coming down the pipe. Depending on the size of your business and the complexity and whatnot, you might even switch to monthly accounting, where every month you're getting a report from your accountant. And what you'd want is on your balance sheet, in the liability section, would be just a line that says accrued tax liability, or accrued taxes or taxes payable, which all means basically the same thing. And so that way you would see, hey, I've got 500 grand in the bank, and that would be on the asset side. On the liability side, you would see that I've got, $38,000 taxes payable. And so what that will tell you is I can't touch the full 500 because I got 38 over here that has to be that has to go to taxes. Now, something I've done, and this might be a really handy practice, is to actually open a separate bank account inside your bank and make that your tax account. And what that can do is, even if you're not going to pay it out to the government, is when you get that report from your accountant at the end of the month or at the end of the quarter that says, hey, Cliff, looks like we're on track. You're going to have, I'll say it this way. In the last 90 days, you've accrued about $38,000 worth of taxes you're going to have to pay at the end of the year. That just goes into that tax account. That way, it's like, don't touch this money, and you can just hold it there until the end of the year. Now, something else you can do, this is a little bit of an advanced tip, is if you have, Cliff, some kind of like a line of credit perhaps it's for building repairs or something like that, you can actually use that $38,000 of tax savings and just temporarily pay down your line of credit. So now you're saving money on interest while that's happening. And then just make sure that you reborrow the money off the line of credit and put it back into your tax bank account at the end of the year when it comes time to actually pay the government. Just be very careful that you know that that line of credit owes $38,000 back to that tax account. It's an advanced way to save a few extra dollars and kind of cancel some interest for 9 months while you're not using that money. So, and I'll also just take this opportunity to say that, like, where a lot of entrepreneurs get into trouble is with a concept called unearned revenue. And so that's when we've had money come in, but we actually can't use it or touch it yet. So let's say, for example, it's October, right? Or let's say it's September, which it basically is now. And if let's say that I'm going to create a mastermind, a 12-month course where entrepreneurs can fly into Austin and be with Tim, 4 times a year or something like that. It's a year-long program. It starts on January the 1st. Let's say I charge $20,000 for that. Let's say I have 10 entrepreneurs that all join and they all pay the one pay option. Therefore, here on September the 1st, I've got this inflow of $200,000. The temptation is to say, oh my God, it's time to go to Disneyland, right? Like
that was my first thought.
Right.
Let's buy a house.
Yeah, I got almost $250,000 G's just sitting here. Holy, let's pop some bottles. Let's do this, right?
Yeah.
So, but here's the thing: have I actually earned a dime of that yet? And the answer is no. I will earn that $200,000 over the course of January through December. So the way that I track that in my own business, because that actually is a true example for my business, is that I have a group that meets 4 times a year, and all the rest is we've taken the whole amount that someone has paid us, we divided it into 12, and then we've now put that into the next 12 months. So January through December, let's say that I have 12 people that have all joined, so it's $240,000. That means I've now earned $20,000 at the end of January, and $20,000 at the end of February, and so we have another bank account. We've got one that's called taxes. We've got another bank account that's called unearned revenue, and so it's a calculation that my assistant Sarah is looking at, and every month, at the end of the month, she just sends me a simple message: "Hey Tim, we had this much unearned revenue come in. We've had this amount of money that's gone from unearned revenue to earned because we've now provided whatever product or service. Please now transfer this number of dollars from unearned revenue account into general operating, or from general operating into unearned, whatever the balance is for that month."
I love it.
And so now what happens if I get hit by a bus? I hate doing the mastermind. Someone cancels, like all the curveballs of life that come down the pipe. If something were to happen and something has to change with that mastermind, I'm not stuck scrambling to try and invent $100,000 because I went to Disneyland, put a down payment on a house, got an Escalade, and popped some Cristal, if you know what I mean.
Totally. And so I'm discovering that as long as you don't see me, I am fine. So I'm just gonna go into cyber thing right now. And okay. I'm just going to share you guys again what's going to happen, because we're a little bit over time, but we wanted to cover all the questions, and I know you have even more. One of the questions one of the comments that came in was like, wow, there's so much I don't know about the right way to manage money. And I have all this time where money comes in, I don't know how to account to them, I don't know what I owe, and then at the end of it, where did all the money go? And and this is stuff we don't learn in school, right? It's just so annoying. So guys, you can learn that in 2 days in Austin, Texas. That happens next week. And all you have to do as a good entrepreneur is support another entrepreneur. I think this is very admirable, Tim. This is fantastic. All you have to do is choose who you want to help, right? From here, read their stories, or just click on whoever and just send them some money. So the way to do that is come to I'm.geek.com/live, click on this little icon, reserve your seat. We don't have a lot of space left, or do we, Tim? How are we doing?
I think there's about 30 or 40 seats left. And so I'm not sure if that's a lot or a little. The room holds up to 100. So we're going to have a nice group. And
It'll be mingling as well?
Yeah. Oh, certainly. Yeah. I'm sure some people want to hang out at night, and all the rest will be great networking, and we'll have lunches together and whatnot. So yeah, it's going to be a great 2 days.
So what a better way to learn your numbers, know the math, and help your business grow by joining us right here in this event right here. So you know where to go, you know what to do, you know how to spread the word. You can bring your people, right, to join us and speak with us and get to meet us. And it'll be another 100 amazing people in Austin that you can get to meet, plus Tim and me. So it'll be fun. Thank you, Tim, so much. I apologize for the echoes. We're going to fix that for the next one. Thank you for being such a sport. And I love this. Everybody getting so much value out of just hearing you chat and sharing your knowledge. So we'll meet you next week. Anything else that we need to leave our audience with?
Yeah, just a couple things. Number one, as you said, Ifat, like if people want to bring their COO, if they want to bring their number two, if they want to bring their assistant or whatever, anyone who's going to help them on their financial journey, bring them. Yeah, I mean, if you have a team of 10 people, you want to bring them all. As long as we've got spots, bring them all. That's absolutely on side. Like that is allowed. Secondly, I just wanted to thank you, Ifat. I know that you're so passionate about entrepreneurship, and you put a ton of work into everything from the graphic design to the tech setup to meeting with me ahead of time and all the rest. I mean, you made all of this happen, and it's a huge gift that you're giving to entrepreneurs to do what you do. So thank you for everything that you're doing. And then lastly, I just wanted to share with entrepreneurs that, I on my heart, I know that like entrepreneurs just make such a difference for the world. And we way outperform the amount of oxygen that we take up on the planet, and it just breaks my heart when a blind spot like running out of cash unexpectedly comes and gets in the way. So I want to help entrepreneurs build real businesses, not just hype businesses that are all about the maximum list size or the most followers on Instagram. I want to see you get everything that you want out of your business. And a grounding in the very base details of like a little bit of knowledge around finance and just a little bit about accounting, which we're going to cover in 2 days, can give that to you. And I, from my heart, want to see you thrive in your business, and the opportunity to be a part of your success story just means the world to me. And whether that means just today's interview, or whether that means today's interview and I see you in Austin, the 8th and 9th, whatever that is, I'm just so grateful for the opportunity to be a part of every person's success story that they're authoring every single day as an entrepreneur.
I love it. I love it. I love it. And I wish you could see my face. You'll know I'm smiling. So thank you so much. And thank you guys. Share the message. Join us in Austin, and we'll see you on the next show. Thank you.